All right, so we've got this pretty big stack of sources you've given us all about Bitcoin and blockchains. Seems like you really want to get to the bottom of what Bitcoin is, how it works, and kind of like where it fits into the bigger picture, right?
Yeah, it looks like you're interested in both the history behind it and also maybe like what impact it could have in the future.
Yeah, exactly. So we're going to try to pull out the most interesting and important stuff from all this to try to help you understand it better. I'm noticing some interesting stuff already, like about how money has evolved over time.
That's a good point. Bitcoin didn't just kind of appear out of thin air. It's actually part of this really long story about how humans have been exchanging things like forever, basically.
Right. Like I'm seeing here, it goes from, like way back when it was just bartering, trading one thing for another. Then people start using commodity money like gold and silver. And then eventually we end up with the fiat currency we all use today.
Yeah, and what's cool is that at each step, it involves trusting something different.
Yeah.
Like early money, like cowrie shells or those gold coins. It was all about how much that object was actually worth on its own.
So it was like, ooh, this shell is rare and pretty, so it must be valuable.
Exactly. But then we moved to systems where money was like a promise, a claim on something valuable, like, that paper money backed by gold. But now with fiat currency, it's all about trusting governments and those big institutions.
So instead of something you can hold, it's more about believing in the system behind it. So then where does Bitcoin fit into all of this?
It's kind of like a new chapter in the story of money. Because it works without any government or central bank, it relies on this decentralized network they call the blockchain.
Okay, blockchain. I've heard that word so many times, but I still don't really get what it is.
Well, imagine like a giant digital ledger, a record of every single Bitcoin transaction ever. But the difference is this ledger isn't kept in one place. It's spread across thousands of computers all over the world.
Whoa, so there's no single point of failure or control. That's so different from how our financial system works now.
Exactly. That makes Bitcoin super resilient and really hard to censor. Nobody can just shut it down or change the rules whenever they feel like it.
That's wild. But how does that actually work? Like, do all these computers somehow agree on which transactions are legit?
That's where the idea of a node comes in. Basically, every computer on the network is a node, and they're constantly talking to each other to, check the transactions and update the ledger.
So it's like a massive global bookkeeping team.
Uh-huh. Yeah, you could say
Yeah.
that.
Yeah.
And to keep everyone on the same page, they group the transactions into blocks and add those blocks to the blockchain. Each block is like a page in that digital ledger.
Okay, starting to make more sense. But what about this mining thing I keep hearing about with Bitcoin? How does that fit in?
Mining is how new blocks get added to the chain. Basically, you have these special computers, miners, and they compete to solve these complex math problems.
Like a digital puzzle competition or something?
Kind of, yeah. And whoever solves it first gets to add the next block and gets rewarded with some brand new Bitcoins.
Ah, so that's how new Bitcoins come into existence. But what's stopping a miner from, like, cheating or making up fake transactions?
That's where the clever design of the blockchain comes in. Each block is linked to the one before it using what's called a hash function.
Ooh, hash function. Sounds kind of scary.
It's not as complicated as it sounds, really. Think of it like a fingerprint, but for data. So each block has this unique fingerprint based on its contents. And that fingerprint is linked to the fingerprint of the previous block.
So if someone tried to change a transaction that already happened, it would change the fingerprint and mess up the whole chain?
Exactly. Everyone on the network would instantly see that something's wrong, and that altered block would get rejected. It's all about transparency and consensus. Everyone can check if the blockchain is legit.
Okay, that part makes sense, so everyone can verify it. But before we dive too deep into the technical stuff, I noticed our sources mentioned some really cool historical examples of decentralized systems even before the internet existed.
Oh yeah, those are fascinating, like the Ray stones on the island of Yap. There were these huge stone discs, some weighed tons, and they used them as currency.
Yeah, I read that moving those things was a whole community effort. But how could something so impractical be used as money?
Well, it wasn't like they were physically moving the stones for every little transaction. The Yapes people kept track of who owned which stone through shared memory and like communal agreement.
So it was more like, everyone knows this giant stone is yours, so we'll accept it as payment.
Precisely. It shows that the idea of transferring value without a central authority has been around for a long time. And Bitcoin is kind of like a digital global version of that using technology.
Wow, that really puts things in perspective. So let's get back to the heart of Bitcoin. Like, what exactly is a Bitcoin and how do you even get one?
A Bitcoin is basically like a digital asset recorded on that blockchain we talked about. It's not a physical coin. It's more like a digital entry on that giant ledger.
Okay, so how do you actually own a Bitcoin then?
It all comes down to these things called public and private keys. Your public key is like your Bitcoin address, the one you share with others when you want to receive payments.
So like an email address, but for Bitcoin.
That's a good analogy. Your private key, though, is more like your password. That's what lets you actually authorize transactions and spend your Bitcoins.
And if you lose that private key, your Bitcoins are gone forever.
That's right. There's no central authority to reset it for you or anything. So it's super important to keep your private keys safe because if they're lost or stolen, that's it.
Our sources mention different ways to store those keys, like simple paper wallets or more advanced hardware wallets. What's the difference between those?
It depends on how much security you want and how tech-savvy you are, really. Paper wallets are like offline storage. You just put your keys on a piece of paper and keep it somewhere safe. But hardware wallets are these special devices made specifically for managing those keys securely.
So I guess choosing the right wallet depends on how much Bitcoin you have and how worried you are about losing it.
Exactly. But no matter how you store them, the main thing is that those private keys are the ultimate proof of ownership in the Bitcoin world.
Got it. That makes sense. So once you have a wallet, how do you actually get some Bitcoins? Do you just like buy them?
That's where cryptocurrency exchanges come in. They're like marketplaces where you can trade Bitcoin for other cryptocurrencies or even for regular money like dollars or euros.
So kind of like a digital stock market, but just for Bitcoin.
You could see that, but there are some big differences. The crypto market is open 24/7, unlike the stock market, and it's known for being, well, pretty volatile.
Volatile, yeah. Our sources definitely make it seem like the price of Bitcoin has been on a wild ride.
It has. There have been some huge swings up and down.
I saw something about Pizza Day back in 2010 where someone bought two pizzas with like 10,000 Bitcoins. Can you imagine how much those pizzas would cost today?
Uh-huh. Yeah, it's crazy to think about how much the value has changed over time.
Yeah.
It shows you how much speculation is still driving the market.
Speaking of speculation, our sources mentioned a few times when Bitcoin went through these big bubbles and crashes. Seems like it's not for the faint of heart.
True. Investing in Bitcoin definitely has its risks. The fact that there's no established way to price it and the market never closes, it all adds to the volatility.
It seems like even with its decentralized nature, Bitcoin has had its fair share of drama. I read about that hack back in 2010 where someone found a loophole in the code and created like billions of fake Bitcoins out of nowhere.
Ah, yes, that was a big one. It really tested how resilient the system was and brought up this whole question of blockchain immutability.
Immutability. What does that
Yeah.
mean exactly?
Basically, the idea that the blockchain is supposed to be tamper-proof and permanent. Once a transaction is added to the chain, it should be impossible to change it.
But obviously that wasn't the case with that 2010 hack.
Right, that's why it was such a big deal. The community had to decide, do they just accept those fake Bitcoins and risk the whole system collapsing? Or find some way to undo the damage?
So what did they end up doing?
They decided to fork the blockchain. It's kind of a tree trunk splitting into two branches. Basically, they created a new version of the blockchain, but without those fraudulent transactions.
So they kind of rewrote history.
In a way, yes, but it wasn't a decision they made lightly. It required agreement from the majority of the network participants.
It sounds like that hack was a pivotal moment for Bitcoin.
Definitely. It showed how important community governance is in a decentralized system. There's no central authority to step in and fix things, so the community has to figure it out themselves.
Speaking of pivotal figures, I have to admit I'm kind of fascinated by the mystery surrounding Bitcoin's creator, Satoshi Nakamoto. Our sources went pretty deep into all the attempts to figure out who this person is.
Yes, the whole Dorian Nakamoto mix-up in Craig Wright's claims, it's a real rabbit hole.
It's like a real-life detective story. And the fact that Satoshi owns a ton of Bitcoin just adds to the intrigue.
For sure. If those Bitcoins ever moved, it could shake up the whole market, but for now, it's still a mystery.
I'm hooked. Do you think we'll ever know for sure who Satoshi Nakamoto is?
It's a question that's been bugging the crypto world for years. Maybe one day we'll know, but for now, it's all just speculation.
Well, while we ponder that mystery, let's shift gears a bit and talk about another interesting concept, Bitcoin forks. I'm realizing they're actually more common than I thought.
Yeah, they happen when the Bitcoin software gets modified, creating a new version with maybe different rules. Think of it like a branching path, each branch representing different ideas about how Bitcoin should evolve.
Our sources mention some pretty famous forks like Bitcoin Cash and Ethereum Classic. So why do these forks happen in the first place?
There are a few reasons. Sometimes it's because of disagreements within the community about where Bitcoin should go. Other times it's because people want to make technical improvements.
So it's like different groups deciding to go their separate ways.
You could say that. Like Bitcoin Cash was created because some developers thought Bitcoin had become too slow and expensive to use for everyday transactions. They wanted to make the blocks bigger to allow for faster and cheaper transactions.
Okay, so it's like a debate about how to scale the technology. But what happens to the original Bitcoin when a fork happens?
It keeps existing alongside the new forked version. And usually, anyone who had Bitcoin at the time of the fork gets an equal amount of the new cryptocurrency.
So it's like a bonus for the early adopters.
Yeah, in a way. But it's important to remember that the two cryptocurrencies can end up being worth very different amounts and function differently over time.
Got it. So forks aren't just a technical thing, they can really impact investors.
Absolutely. It's a complex issue that shows how decentralized Bitcoin really is. There's no one in charge to say which version is the right one, so the market decides which chain ultimately wins.
This brings us to another really interesting thing that came from a Bitcoin fork, Ethereum. Our sources describe it as something bigger than just a cryptocurrency.
Right, Bitcoin is mainly focused on being digital money, but Ethereum is more like a platform. It lets developers build and run decentralized applications, or dApps for short.
dApps, what are those exactly?
They're applications that run on a decentralized network instead of on a single server controlled by a company, which makes them harder to censor and less likely to go down if one part fails.
So it's like the difference between using a web app that lives on a company's servers and using something like BitTorrent, which is peer-to-peer.
You got it. And one of the coolest things about Ethereum is that it lets you create these things called smart contracts.
I gotta say, smart contracts sounds like something out of a sci-fi movie.
Maybe. But they're actually pretty simple. Imagine contracts that can carry themselves out automatically, with all the rules written directly into code. So once certain conditions are met, the contract just does what it's supposed to do.
Like a vending machine for agreements. You put in the right stuff, and the contract spits out the agreed-upon outcome.
Exactly. Smart contracts get rid of the need for middlemen and central authorities, making things more efficient and transparent.
That sounds incredibly powerful. Our sources said smart contracts could change a ton of industries.
For sure. Think about supply chains. Smart contracts could automate payments and track goods as they travel around the world. Or in voting, they could help make sure elections are fair and secure. The possibilities are huge.
But are there any risks with these smart contracts? Like, what if there's a bug in the code?
That's a valid concern. The DAO hack is a perfect example of how things can go wrong. The DAO was this decentralized organization built on Ethereum, and it got hit with a major security breach. It ended up losing millions of dollars.
So even with the promise of smart contracts, you still need really good code and careful security checks.
Absolutely. The DAO hack was a wake-up call for the Ethereum community. It showed everyone how crucial security is in this blockchain world.
That's a good point to pause on for now. When we come back, we'll explore even more about the blockchain world, like all about those digital tokens and ICOs, and we'll talk about some of the risks and scams to watch out for. So before the break, we were digging into smart contracts and that DAO hack. It seems like there's a whole lot more to this world than just Bitcoin.
Oh yeah, for sure. We've only just scratched the surface. The world of digital assets goes way beyond just Bitcoin and Ethereum. There's a whole universe of these digital tokens out there.
Yeah, our sources mentioned something about different categories of tokens. Can you break those down for me?
Definitely. Think of them in three main groups: blockchain native tokens, asset-backed tokens, and then utility tokens. They each have their own special purpose in the whole blockchain ecosystem.
Okay, let's start with the blockchain native tokens. Are those the ones like Bitcoin and Ether?
Exactly. Those tokens are built right into their own blockchains, and they basically work as a way to exchange value, kind of like how we use regular cash in our everyday lives.
So they're like the digital version of dollars or euros.
Exactly. Then you've got asset-backed tokens, which are kind of cool. They represent ownership of real-world stuff, like imagine a digital deed to a house or a share of stock, but it's all on the blockchain.
So instead of having a paper certificate, you'd have a digital token that proves you own something.
Exactly. It can make buying, selling, and transferring ownership way more efficient and secure.
That makes sense. And what about utility tokens? What makes them different?
Utility tokens are designed to give you access to a specific service or platform. Think of them like like digital vouchers or loyalty points. So, for example, you might need a certain utility token to use a decentralized storage network or to play a blockchain-based game.
So it's like having a key that unlocks certain features within a specific blockchain ecosystem.
Exactly. They add a whole new layer of possibilities to the blockchain world.
Okay, I'm starting to see how diverse this whole world of digital assets is. So how do ICOs fit into all this? I keep hearing that term.
ICOs, or initial coin offerings, are a popular way for blockchain projects to raise money. They basically create and sell their own digital tokens to investors, kind of like when companies issue shares of stock in an IPO.
So it's like a way for blockchain startups to crowdfund their projects.
Exactly. ICOs have become huge in the crypto world. They've brought in billions of dollars in investment over the last few years.
But our sources also mentioned some concerns about regulatory scrutiny around ICOs. What's that all about?
Well, there have been some issues. While there are plenty of legitimate ICOs, there's also been a lot of fraudulent projects that basically just take people's money and disappear. It's a bit of a wild west out there. You got to be careful.
So buyer beware. What are some red flags investors should watch out for when they're thinking about an ICO?
A big one is if the project team isn't being transparent. You always want to do your research before investing in any ICO. Look into the project's goals, the team behind it, and what they call the tokenomics.
Tokenomics, that's a new one.
Yeah, tokenomics refers to the economic model of the token, basically. It includes things like how the token is distributed, how it's going to be used, and what mechanisms are in place to make sure it holds its value. Understanding those things can help you figure out if the project has long-term potential.
That makes sense. So it sounds like investing in ICOs requires a lot of research and a healthy dose of skepticism.
Definitely. You got to be able to separate the real projects from the hype and the potential scams. It's not all sunshine and rainbows in the blockchain world, unfortunately.
Speaking of scams, our sources had a pretty colorful list of ways people have tried to take advantage of this technology.
Yeah, it's unfortunate, but wherever there's money to be made, there will always be people trying to scam others. And cryptocurrency is no exception.
What are some of the most common scams people should be on the lookout for?
One of the classics is the pump and dump scheme. It's where a group of people coordinate to buy a certain cryptocurrency, driving up the price artificially. Then they dump it all on unsuspecting investors, leaving them holding worthless tokens.
So basically classic market manipulation, but in the crypto world. What else should people watch out for?
Fake ICOs are another big one. They're basically elaborate schemes designed to trick people into investing in projects that don't even exist. They often have these fancy websites and promise crazy returns, but it's all just a way to steal your money.
It's a good reminder that even though this technology has the potential to do good, it can also be used for bad. What about mining scams? I've heard those can be pretty tricky.
Yeah, those are tough. They'll promise you these crazy returns on investments in crypto mining operations. They might say they have special hardware or secret techniques, but a lot of times it's just a Ponzi scheme to make the organizers rich.
So like the digital version of a snake oil salesman.
Exactly. They prey on people who don't fully understand the technology and are hoping to get rich quick.
It seems like the main takeaway is to be careful and do your research. If something sounds too good to be true, it probably is.
Couldn't agree more. Education is the best way to protect yourself from scams. Take the time to really understand the technology, the risks involved, and always be skeptical of any promises of guaranteed returns.
Our sources also talked a lot about how important it is to keep those private keys safe. What are some of the best ways to do that?
That's crucial. Remember, if you lose your private keys, you've lost your crypto, there's no getting it back. There's no bank to call or password reset button. One good option is to use a hardware wallet. It's a special device made to store your private keys offline, where they're much safer.
So it's like a digital safe for your crypto.
Exactly. Another option is a paper wallet, where you print out your keys and store them in a secure location.
I read a story about someone accidentally throwing away a hard drive that had millions of dollars worth of Bitcoin on it. That's terrifying.
Yeah, you got to be careful. Always make sure you have backups and never keep your only copy of your keys in one place.
So far, we've been focusing on public blockchains like Bitcoin and Ethereum, where anyone can join. But our sources also mentioned something called private blockchains. How are those different?
Private blockchains, as the name suggests, are controlled by a single entity or a small group of organizations. Not just anyone can join and participate, unlike with public blockchains.
So they're more like traditional databases, but with the added security and transparency of blockchain technology.
You could think of it that way. They offer more security, transparency, and immutability, but within a controlled environment.
What are some of the ways private blockchains are being used?
People are experimenting with them for a lot of different things, especially in industries like finance, supply chain management, and healthcare.
Our sources mention some big names like JP Morgan and R3 that are already using private blockchains.
That's right. JP Morgan developed its own blockchain platform called Quorum, specifically for financial institutions. It's designed to process transactions faster and more securely than traditional systems.
And what about R3? What are they doing in the blockchain space?
R3 is a group of over 80 financial institutions that are working together to develop blockchain solutions for the financial industry. They're basically trying to figure out how this technology can make things more efficient, reduce costs, and improve security.
So it seems like even those big traditional institutions are starting to realize how powerful blockchain technology can be.
Absolutely. While the hype around cryptocurrencies might fade in and out, the technology itself has the potential to fundamentally change the way we do business.
It's amazing to see how this technology is evolving and being used in so many different ways. But with all this talk of disruption, is it fair to say that blockchain is sometimes a solution looking for a problem?
That's a good point. While blockchain has huge potential, it's not a magic solution for everything. Sometimes the old ways of doing things are still more efficient and cost-effective.
So it's all about finding the right tool for the job. Blockchain is a powerful tool, but it's not always the best one.
Exactly. You have to look at the specific situation and decide if blockchain actually adds value or if it's just being used for marketing hype.
That's a great point. So like with any new technology, it's all about finding the right balance between innovation and practicality.
Exactly. The blockchain world is still very young and it's constantly changing. It's an exciting time to be involved, but it's important to be level-headed and think critically.
I think we've given our listener a lot to think about so far. Before we wrap up, what are some key things they should remember as they continue to explore this world of Bitcoin and blockchains?
One of the most important things is that this is a fast-moving field. What's true today might not be true tomorrow, so you got to keep learning. Stay curious and keep up with the latest developments.
It really is like drinking from a fire hose.
Haha, yeah, it can feel that way. But don't get overwhelmed by all the information out there. Just focus on understanding the basics first, like how decentralization works, how the blockchain works, and the different types of digital assets.
And once you have that solid foundation, you can start digging deeper into the more complex stuff and how it can be used.
Exactly. And always remember that security is super important in this world.
Mm-hmm.
You have to protect those private keys like they're a huge stack of cash.
And never forget to watch out for scams and those promises of easy money. If something sounds too good to be true, it probably is.
Couldn't have said it better myself. Knowledge is your best weapon against those scammers. Take the time to learn about the risks before you invest any money.
It sounds like a healthy dose of skepticism is crucial in this space.
For sure, don't be afraid to ask questions and challenge what you hear. The more you understand, the better decisions you'll make.
This has been an amazing journey so far. What's one final thought-provoking question you'd like to leave our listener with?
Let me see. How about this? As blockchain keeps getting bigger and more people use it, what if the lines between public and private blockchains start to blur?
That's interesting, because right now they seem pretty separate. Like, public blockchains are open to everyone, anyone can join, but private ones are controlled by, just a few organizations.
Yeah, that's true. But what if we start seeing these hybrid systems that combine the best of both?
So, like, businesses could use private blockchains for their internal stuff to keep things private and under control, but then they could easily connect to public blockchains for certain transactions or when they need to share data.
Exactly. Imagine businesses running their own private blockchain, but then seamlessly plugging into a public one when they need to.
That could be a game changer. It could make things so much more streamlined and transparent for businesses, especially in a global economy.
It could totally change the financial landscape, too. Like, the lines between centralized and decentralized systems could become really blurry.
It's amazing to think about how much potential this technology still has. It feels like we're just at the beginning of something huge.
We are. The stuff we see happening today might seem revolutionary, but it could be nothing compared to what's coming next. Who knows, maybe you'll be the one to come up with the next big blockchain breakthrough.
Well, I'm definitely feeling inspired to keep learning more. This deep dive has been incredible. It's really opened my eyes to the world of Bitcoin and blockchains.
Yeah, we covered a ton of ground, from how money has evolved over time to all the technical details of the blockchain,
Yeah.
and then to all the different ways this technology could change things.
I think one of the biggest things I've learned is that this isn't just for tech people or crypto fanatics. This technology could affect all of us in a big way. It's already changing how we do business and how we think about money.
Absolutely. The important thing is to stay curious, be open to new ideas, and approach it all with, excitement, but also a critical eye.
I totally agree. Knowledge is power, especially in a field that's changing so fast. And never stop asking questions because in the world of Bitcoin and blockchains, the answers are always evolving.
Well said. Hopefully this deep dive has given you a good starting point to keep exploring this fascinating and constantly changing world.
Until next time, keep learning, stay curious, and happy exploring.